Thank you for joining us again for the next sort of significant keynote at the OSL Digital Asset Capital Introduction Conference. The entire intent of the conference is to bring allocators of capital and connect them with ways of expressing their view into digital asset markets. And so, really delighted to introduce Tim McCourt, who's Managing Director and Global Head of Equity Index and Alternative Investment Products at the CME Group. Coming late night from Chicago and doing a fireside chat with Ian Sterling, Head of Marketing and Comms at OSL. Gents, let me pass it over to you.
Thanks, Matt. There's definitely more than one ways to skin a cat. So are there more than one ways of digging for money, and Bitcoin is no exception. From Meltem earlier this morning, we heard about the equity sort of disruption that we're seeing in the S&P 500 of technology companies supplanting the old traditional sort of companies. Then we talked with Michael Saylor a little bit about Bitcoin and the investment case that it represents. And I think it's very appropriate now to see the maturation of the product shelf that Bitcoin offers with Tim McCourt to talk about the CME's business and certainly around the derivatives, giving another channel and avenue for investment and digging for money. So let's start digging for money, Tim, and maybe you can share a little bit about yourself and CME Group itself.
Great, and Ian, thanks for having me, and congratulations on a great event so far. Really pleased to join everyone today. Looking forward to the conversation, and I look forward to today we can all get together in person again. For those of you that I haven't had the pleasure of meeting historically, my name is Tim McCourt. I'm Global Head of Equity Index and Alternative Investment Products at the CME Group. So my team, we look after the global equity index benchmarks such as the S&P 500, the NASDAQ, the Russell 2000, the Nikkei. And we look after alternatives where at CME that includes things like commodity indices, cryptocurrency, and our recently introduced water futures contract. So quite a lot of index products are in my team's remit. But just in case you're also not familiar with the CME Group, just allow me a minute or two to tell you what CME Group is. CME Group is a nearly 180-year-old institution where we offer derivatives, futures and options on futures and cleared OTC products across fixed income, equities, foreign exchange, agricultural products, energy and metals products, and cryptocurrency. Certainly everyone's favorite asset class here joining us today. And we're really the marketplace. We're the venue. We're a tried and tested, regulated venue that folks can come together at to manage their risk, to access markets, to transfer their risks amongst themselves. And we offer 24-hour trading from Sunday night to Friday night from a U.S. hours perspective. And it's something that we pride ourselves in really listening to customers, working with customers to understand their risk management needs and to develop and introduce innovative risk management and tools and products by which they could access the market. And cryptocurrency, I think, is just one of the latest and greatest examples in our nearly 2-century history of how we do that for customers.
I think that's a great starting point for us, Tim, to take a look back and maybe helping the audience by putting themselves in your shoes if you look back 3 years ago. And I think we've noticed from the conversation with Meltem and Michael, there's actually a very distinct lineage of going from curiosity to experimental and then ultimately adoption. But if we can focus really on the first two for the moment, just to give a little bit of perspective on how you guys went through boardroom into building a business case that now is actually viable.
Yeah, I mean, that's a great question. I mean, it's hard to believe it's been 3 years. You know, it both seems really fast and really slow at the same time. But it's certainly been exciting. And when we look at CME Group's foray or journey into cryptocurrency, we did launch our Bitcoin futures in December of 2017, so a little over 3 years ago. But our journey into cryptocurrency started a little bit before that. We first introduced the Bitcoin reference rate with our partners CF Benchmarks in November of 2016. And before that, we were hearing loud and clear from customers that they really had some need for not only risk management, but price transparency in the cryptocurrency space. As market participants and our customers were getting more involved in cryptocurrency and specifically Bitcoin, that's what really provided this upwelling of demand and interest and Ian, to your point, curiosity from our perspective at CME Group of what is our role in the marketplace for cryptocurrency? What is the role we need to play for the market and for our customers on something that's so new and exciting at the time? So we first started with the reference rate, which is the rate that underlies our futures contract, where our futures contract is cash settled. It's equivalent to 5 Bitcoin or 50 Ether, but we only move the US dollar price performance of the underlying reference rate. And we first built that reference rate to pull in transactions from the Bitcoin US dollar fiat spot market to really assign and have a transparent, trusted price that's published every day, including Saturdays and Sundays, about at a point in time, what is the US dollar value of Bitcoin? And that was the first thing. Customers really wanted transparency and consistency of what the value of Bitcoin was. And if you think back to 2015, 2016, the price divergence was enormous across the various venues and spot trading. So there's a real need for consistency in pulling together that price. And that was our first step. That was kind of an experiment of sorts where, like, this is something we could do. We were interested in a product, but introducing a futures product on crypto would take us a little bit longer because we really needed to validate with the customers. We worked with our regulator. And when we kind of go into some of those boardroom conversations that led up to our October of 2017 announcement, right before the December launch back in 2017, it was really about, are we going to do this? Our customers were clear in their need. The demand was palpable. But there were things that it was not completely risk-free for us as an organization. We take our role in the marketplace with enormous sense of responsibility of the role that we play in helping participants manage risk and transfer risk. And like I said, we're nearly a 200-year-old institution at CME Group. But when you look at that history, what's really interesting is we started off as a butter and eggs exchange on the streets of Chicago and growing into all the 6 major investable asset classes at the time. So when we look at CME's history and the role we play in innovation and risk management, we have a long storied history of rising to meet the new challenges as technology continues to advance, as risk management needs continue to evolve. So when we looked at something like cryptocurrency, despite it being so new or so nascent to us at the time, only being available a few years in the marketplace, it was clear to us that not only did the market expect us to play this role as a leading provider of risk management to the marketplace, we also expected of ourselves. This is something we had to rise and meet the challenge, but not everyone was always comfortable, but they trusted in the process, they trusted in customer validation, and we always believed and knew deep down that if we focus on delivering what customers wanted, this is going to work out well, not only for our customers, but for ourselves, and we could take that step together. And that's really what gave us the energy and the fortitude to move forward, is that customers wanted it. And it's our job to listen to our customers. And that approach has really worked out well, not only for cryptocurrency, but for all our products. And it's been a really fun few years going from that decision of, are we going to do this, to now being one of the leading centers of price discovery for Bitcoin and one of the leading providers of cryptocurrency derivatives. So certainly very pleased that we made that decision to go forward about 3.5 years ago.
It's a very romantic story, of course. Can you talk, though, maybe a little bit through some of the naysayers and getting through the obstacles? It's great. I mean, the entrepreneurial spirit, over 200 years, etc. There must have been a little friction, a few obstacles that you needed to overcome. I'm framing this question really thinking about the CIOs in the audience right now who may be having this conversation and trying to take it to their boards as well and are in a very similar experience, maybe from the investment case more so than your business case, but I think there'll be a lot of similarities there.
No, absolutely. It's a great question. And, certainly with new things, there's always people who embrace it early on and people who need a little bit more convincing, and some people who may never get on board but could still see that there's potential. And how we converted some of the naysayers was really focusing on the needs that this met in the marketplace, but also what was our expertise in the marketplace. When we were looking at product design, we had a really interesting choice that the market, wanted physical products. They wanted financially settled products. We don't view it as an either or decision, but when we looked at what could we bring to a market in a way that comports with our expertise, our leader as a market position, it was bringing a contract to market that, one, tracked an index that was based on the spot market, so there was convergence to an underlying asset. And then when we look at the distribution network we had, it was critically important for our success that we wanted this to be financially settled at the onset, that it plugged and played the same way any other futures contract did in our system. In terms of a widget through the machine, it's no different in terms of buying a Bitcoin future than buying an S&P 500 future. So that was really critical, is lean into our strength as an organization, extend the frontier to include something new. But it wasn't necessarily, we didn't want to get into things that we knew we were not necessarily skilled at the time, whether it be custody, the physical delivery of Bitcoin, having to solve some of the really heightened sensitivities and concerns around cybersecurity, insurance, theft of Bitcoins at the time. If you think back to 2017, there were some really almost existential risks that were happening around us as people were trying to figure that out. And we're like, we need to focus on what works for us and what works for our customers and do what we do well and focus on that. And that's how we got people over the line. We could wall off some of the more existential or esoteric risks around, this is what happens when you get involved in Bitcoin or blockchain. We're like, yes, but like this is our product solution. It works the same. We have an index, it tracks the asset, it provides the risk management, but we don't have to necessarily do all of some of these other things that you have concerns on, and focus on what we can get to market in a way that everyone is on board with, and will continue to innovate down the road. We didn't need to solve all of those problems on our first step. What was critical and what got everyone over the line is we just need to take that first step. We need to start deploying what works for us, and it can be incremental. We can be patient on success, but if we rush and focus on something that we're not well equipped to handle, we're going to fail, and we're going to fail fast, and that's what we wanted to avoid. Focus on what works, lock in the early success, and be patient. And that's really how we got the organization involved. And, you know, I think there still are some naysayers that maybe wish we move a little bit more quickly in our product development over the last 3 years, but it's prudent. It's thoughtful. It's methodical. We have a long-term strategy, and we just be disciplined in knowing what do we do well, and let's make sure we do it well when we roll it out to the marketplace.
You have this long-term strategy. Is the success that you've experienced so far come earlier than you anticipated? I'm sure you're pleased with this, but was it a pleasant surprise?
Oh, it's a great, certainly yes. Like, you know, I think back to the first day when we traded Bitcoin in December of 2017, and we traded a little over 1,100 futures contract, a little bit more than 5,500 Bitcoin, and that surpassed my wildest expectations. You know, there are plenty of futures contracts that go up on their first day, and you're hoping for a one lot, a trade, a non-zero number on the board, and to have that many go up on the first day and never look back is astounding. Right now, we're doing about 15,000 Bitcoin futures contracts a day here in 2021. So to also have that type of growth from the first year, kind of almost doubling year over year, having almost 8,000 unique accounts in the product, with the most ever being added in 2020. And we've already added almost 1,000 accounts this quarter in 2021. The fact that the growth has not slowed, is only increasing. All great successes, and really has surpassed, I think, my and the team's wildest expectations when we look back at the versions of ourselves in November and early December of 2017. And I think I'm really excited to see where it goes from here. But when we look at the global reach, the volumes, the open interest, the acceptance of our position as a leading provider of cryptocurrency products, where we were maybe not necessarily a welcome entrant early on, all really great success stories, and I think speaks to what everyone does really well at the CME.
Well, congratulations on that success so far. We're really whizzing through the time here. It's been a great conversation so far. I want to remind the audience, if you had some questions that we haven't touched on yet, please fire it up in the chat. We'll try to get to it. I think it would be appropriate time and remiss for me not to mention some recent events that you guys have had just this year already in February with the launch of your Ether futures. Maybe give you some time to talk a little bit about that approach and what drove this new addition to your product shelf.
Yeah, so when we look at Ether, is something that we always heard from customers, you know, it kind of is the second most popular token by market cap and trading volume. That was always kind of next on people's wish list after we introduced Bitcoin futures. So again, kind of introduced the reference rate, built the futures market, but really accelerated, I think, people's curiosity and interest in Ether is when you look at the upwelling of interest in the Ethereum network and the DeFi and the number of projects, right? I think we're almost at 300 DeFi projects that are coming online. There's a certain amount of, I think, tactile aspects of the Ethereum network and how people can use it to better improve traditional finance and processes. There's a real distinct need for Ether in the marketplace and for Ethereum as a network. So there's a lot of risk management needs that are now kind of following that natural enthusiasm, I think, in the underlying network and technology, and Ether as the fuel for the network. So that's something with that I think I was really pleased that it was not only our third cryptocurrency product between Bitcoin and behind Bitcoin futures and options, but our second token. Kind of making that step to now have not just Bitcoin, I think really cements our commitment to cryptocurrency. And it works the same way. So if people are looking at either managing risk or investing or allocating into cryptocurrency, it's a financially settled future, just like Bitcoin. You're only moving US dollars. It's a regulated venue. It works the same way as all other CME contracts. And now people can start to allocate to Bitcoin. They could allocate to Ether. They could trade them against each other. So now we're starting to kind of think about using futures for that portfolio effect around crypto, which I think is a really exciting development of the Ether introduction as well, the Ether futures introduction as well.
It's interesting to see from that demand-driven approach and then being able to build these products around, take it to market quickly, and see the results in real time like that. On the topic of demand, maybe we should focus a little bit about where you're seeing a lot of your volumes and flows coming from. Has this really been a North American bias? Is it global, or are there pockets of areas that you see surprise you? Areas that you see are lagging that also a surprise to you?
Yeah, so I think what's really interesting about Bitcoin futures is a little bit early to tell for Ether, but showing the same kind of signs of life or the same personality as a product is Bitcoin futures and cryptocurrency more broadly, global phenom, right? I mean, this is a truly global market. When we look at the volume participation and the customer personas that we're seeing in the Bitcoin futures, they're a little bit different than some of the traditional products like the equity index products. And what I mean by that is when we look at the volume by day, the trading hours, about 51% of our trading volume in Bitcoin futures happens outside of the US regular trading day. That's phenomenal. That's an anomaly at the exchange for sure. And then when we look at the country of origin, the orders in terms of where they're originating, also about, between 40 to 45% coming from outside the US, with about 20% of that flow, or we look at the equity index contracts, about 25% of our volume comes from outside the US as a function of time or country of origin, with only about 10% being represented by APAC. So the cryptocurrency products has a much more stronger, balanced global participation, and certainly an outsized expression of interest and demand coming from APAC, which is something that's been really great. It's unique, and I think that's something where people are thinking about getting involved in crypto through futures or derivatives. This is where CME's global distribution really, I think, is a strong point of ours, because we're already plugged into a lot of the brokers, the banks, the executions, the clearing members. And we're just really been able to capture that distribution network, I think, much more quickly than we anticipated, and capture that natural demand function, I think, of the global nature of Bitcoin and cryptocurrency more broadly. So it's been a lot of fun to see that develop. And it's been consistent. It's been like that almost since day one, and 3 years later, the proportionality or the contribution of APAC as a region has kept pace with the growth, which has also been excellent to see.
Well, CME is a very client-centric organization. OSL is a very client-centric organization as well. In this conference, I have to feed the beast here and give the audience what they want. There's a few questions that have come in, a little not planned for us, but first question here. What is your view of the growing volumes of BTC futures on many of the unregulated platforms? Over 2 trillion a month now on BTC futures alone. Thank you for the question, Henry.
Yeah, I think what's interesting is certainly, I think, a wide-reaching growth story around Bitcoin. And then when you look at derivatives, so certainly I don't think it's an either-or choice exactly between unregulated and regulated platforms or exchanges like CME. I really think this is a growth versus growth story. I think different platforms serve different needs to the marketplace, but one of the central tenets of CME is being the regulated venue. We're a trusted, tested, time-storied institution that is regulated as a U.S. futures exchange by the CFTC, and that gets a lot of institutions over the line. So I think when you look at some of the individuals or some of the non-U.S. folks, they're a little bit more comfortable trading in some of these unregulated or perpetual swap markets, but the fact that they're having growth there, A lot of those liquidity providers are recycling that risk right back to CME. And when we look at the distribution of flow, we're hanging in there with some of the top, crypto native exchanges. But I do think we view regulation as a feature and not a bug of our offering, particularly in getting institutions comfortable with making that first initial step.
On that one, unfortunately, for entertainment value, regulation is extraordinarily important. Institutional adoption, we're seeing that coming fast and furious, and now getting the first real glimpses of that in Asia Pacific here from OSL. And so I can see your volume is going to be increasing over time as the more adventurous investors start to look to CME Group as a vehicle for accessing crypto markets. Thank you very much for your time, Tim. It's been most appreciated. I'll give you the last word. What future, or what can we see in the future at CME that we should be on the lookout for?
Well, it's a great question. It's always hard to predict the future, but I think what we've learned the first few years in crypto is as you said, listening to clients is key. We'll continue to focus our efforts on engaging with clients, understand what we should be doing next, what should we be doing differently, what we should be doing more of the same. So just encourage folks to reach out to the team at OSL, reach out to the team at CME. We really are all ears in trying to continue to grow this ecosystem and evolve everyone's risk management needs, or provide that access vehicle for the cryptocurrency market. And I think it's just, what's interesting is I don't know what the future is going to hold, because I think it's so exciting when we look at the white space in front of us. There's a lot going on, both in terms of the underlying technology that then drives some of the financial innovation that we're seeing come to market. And all I know is I don't know what the future holds, but I'm really excited to be part of it.
Tim, Ian, thank you very much. Great insight, and I guess we're all really interested to see how the evolution of regulated futures markets continues to bring market efficiency to the digital asset markets. Thank you very much for your time.